Yeah. Let's get rolling. Okay. Thank you guys for being here. So, this is the MEV Space number 12. We are talking about like digital assets, treasuries. So MEV Space brings together the sharpest minds in crypto to dissect the evolving MEV landscape and beyond. Today is more like a beyond episode. We are going to talk about like digital asset treasury companies, aka DAT. So they are becoming one of the critical forces shaping the future of crypto. And yeah, let's get started. First, I'd like to all the speakers, including our co-host Ben, to have a brief self-introduction about themselves. Then we can get it really started on the agenda. So let's start first from Benny.
Hello, everyone. Nice to meet you guys. My name is Danning. I'm research director at Pantera Capital. I've just joined the firm for 2 months, and that has been a very interesting topic. So, me and my team has been researching on what are the better and more transparent metrics can be built on top of the existing dashboards about that. So that's why also like it lets me to study and everything behind it. Very excited to talk about it and learn everything from everyone.
Okay, thanks. Next one, Jake.
And Masari. And yeah, I crypto ventures fundraising newsletter weekly, and we cover digital asset treasuries. I've written reports about that. And yeah, I'm excited to be here.
Okay, next we have Charles.
Hey, so I'm Charles. I'm the CEO of BTCS. We're the oldest public company in the crypto space in the world. We've been public since 2014. I got into crypto in, I guess, 2013. Um, BTCS really we're a DAT as kind of the byproduct, right? Our focus is more on driving scalable revenue and profit through operations, with the digital asset treasury being kind of what we're accumulating. So it's exciting to see all the new entrants over the last 3 to 4 months.
Okay, cool. Next Ben.
Yeah, I'm Ben, the VP of Engineering at BTCS, and I want to thank Charles for jumping in here last minute with us. We were unable to get one other speaker, so Charles graciously decided to join as one of the leaders at a DAT to talk with us today. So he'll probably answer most of the questions that I can't. But I think we can probably get started right away.
Yeah, for sure, absolutely. So yeah, let me set the stage for today's agenda. So before we get into like details, like I like our speakers to answer like how do you define a digital asset treasury, and how does your role actually intersect with DATs today? I want to start from Charles.
Sure. So I think that the DATs are kind of an interesting product. They're basically a public wrapper on crypto. In the long run, my belief is most of DATs are going to trade at or near their net asset value unless they have something compelling to generate alpha for investors beyond just holding the underlying token. So I think it's kind of a unique market, and it was dominated by effectively. I mean, we were the first, and then MicroStrategy came, but we were unnoticed and at a very small scale. So it'll be really interesting to see how it evolves. I think within Ethereum and the other layer two blockchains where you can actually there's an economy in which you can build a business on. I think we're going to see a lot more innovation, and the DATs will get much more diversified in terms of their value proposition, similar to what happened with the Bitcoin miners going back to 2017.
Cool, very cool. Next Jake. It's like what's your definition of a DAT, and how does your role intersect with it?
Yeah, for sure. So I define DATs. They're basically publicly traded companies that allocate a portion of their balance sheet into crypto assets like Bitcoin, Ethereum, Solana, etc. And as I mentioned earlier, in my role at Masari, I write the weekly venture report. So we cover the total Web3 fundraising ecosystem, and there's a section that covers all newly listed DATs on a weekly basis. So I can really see how the category is moving in real time. And I also recently wrote a piece called the arbitrage trap, which looked at why some of the Ethereum DATs traded below their net asset value, and what that tells us about investor perception of risk in the space.
Okay, Danny. So what's your answer to these questions?
Yeah, beyond everything other speakers has mentioned, I think like overall it's an interesting financial vehicle where I think it also serves as a role as a second foundation, quoting what Franklin says from our team, that if it's an Ethereum foundation, you have to be neutral. You can't be like endorsing this or that or like talk about token price, but this is another actually entity that can help basically bring in like more asset value by accruing more and more like how to say holdings of the asset by using this kind of like reflexive loop where when the company's asset holding value to the ratio of the market how to say market value is going higher, they can issue more shares, and by issuing that more shares, the proceeding can be used for buying more assets. And so over time, they're pushing more and more higher the price of the asset. If you are somebody like a MicroStrategy or others who has like a giant chunk of this asset or like big market share in this category, you're likely actually also affecting kind of like the market, or you have a higher price impact of the asset as well. But so basically, overall, I think it's a net positive thing for the asset category itself. But surely, people been arguing that like it may or may not be like the most how to say fair investment for retail, given that the fact that there's private investors before the public can access it, right? So I'm curious also about this debate in the audience. But overall, in the past few months, it's been really giving, how to say, I guess the ETH as an asset a boom in the price. And as Charles also mentioned, the kind of some people compare it to like the ICO time in 2017. So I think everybody is really interested to look into how it turns out in the long term.
Awesome. Thanks, everyone. So we'll jump right into the first question here after we set the stage. What are the metrics you use today to measure the value or success of a DAT? And then looking forward, what do you expect the long-term metrics will be when DATs mature into a recognized asset class? And we'll start with you, Danny.
Yeah, sure. I think the most common metrics people talk about is a mNAV ratio, which is basically what I just described earlier, of like what's the true value this company is holding in their balance sheet, combining all the assets, including probably like crypto, how to say, like digital asset and also cash, divided by basically the shares that are out there. And so if this is above one, it basically people are trading at a higher value than it actually holds, and in this case, the company can issue more shares. So people being pretty much like trying to compare their mNAV to be the higher the better. I think like Tom Lee and others has commented that also like yeah, if you are trading at one, it kind of is not saying there's much momentum. You have to go up to like 1.2, 1.3, and so to issue at a pretty good, how to say, I believe it's called like issuing at a premium, or please correct me if I'm wrong as well, others, please. But I think like that's being the North Star numbers. But beyond that, I think people being also realizing that like if this whole mental model works out, the actual validating metrics is like, for example, ETH per share. So like if to show that the company actually can grow their balance sheet over time, just like positively. So I think a few company has been able to do that. But yeah, that seems like the two major metrics as I can recall.
Awesome. Jake, what about you? What are the metrics you use today, and what do you think the long-term metrics will be?
Yeah. So there's a few I look at. So like Danny said, mNAV. I look at mNAV enterprise value. So that's calculated as the market cap of the stock plus total debt minus cash on the balance sheet, and then you divide that by the total crypto asset holdings. So that lets us determine whether that's trading at a premium or discount. Um, I this is an interesting one because as I wrote in that article or my report was a lot of the, at least Ethereum DATs are trading below mNAV, and a mNAV of 1 basically tells us that, you know, the stock price is neutral. It's equating how much assets are on the balance sheet. But since they're not redeemable, there's no redemption mechanism to redeem the underlying crypto assets. So in my mind, it's harder to trend towards 1, especially if they're trading at a discount. Um, but then so yeah, I think maybe that's something we can discuss a little later. Because I'd love to get into that deeper. But other metrics I look at right now: average price per acquisition versus current price. So basically, is the treasury in profit or underwater? Trading volume of the stock, how liquid is it? And then if there's a stakeable asset like ETH, what are their rewards today? How much ETH have they generated through yield? And then over time, we're gonna shift towards more fundamental and performance oriented metrics. So yield generations are the DATs putting the idle crypto to work. What exact strategies are being implemented? How transparent the treasury is, and then a correlation in beta, like so how DATs track against Bitcoin, ETH, their underlying asset, broader equities, and how they're being, like, what the perception from TradFi is, how they're being treated by institutions, indices, etc. So yeah, right now it's NAV discounts, basic holding data. Long term, I think it's going to be success will be measured more like an asset manager.
Awesome. And I know, Charles, you got plenty to add on this because we talk about this weekly at at work together. So what are the metrics that you use to value DATs, and then where do you think they're going to go long term?
I mean, I think for non-yield generating DATs, it'll probably stay around. mNAV will be one of the core focuses, and some of the other metrics just discussed. I think when you start to get into ETH, BNB, tokens where you can actually build a business within the economy, I think investors over time are going to start to look at other metrics that they're more used to looking at, like revenue, price to revenue, EBITDA, adjusted EBITDA, PEG ratios. Because if you look at a DAT now, like take BTCS, we are getting valued, below, liquidation or book or mNAV, whatever you want to call it. That gives no value to, 5 years of building out our validator operations. We don't go to Galaxy Digital to stake. We don't go to, Figment. We run our own nodes. We run nodes for Rocket Pool. We're, I think, the 5th largest block builder. Anywhere between 1% to 3% of all blocks on Ethereum are built by our builder. And so if you look at the components of valuation, you have your asset balance, right? Then you have, well, what's the value of the operations, right? That's typically a revenue multiple for an earlier stage company, or maybe a PE multiple if it's more established. And then on top of that, you look at companies that, well, what's the value of management, right? What's the value of just a NASDAQ public company? I mean, we know a lot of these DATs have gone into public vehicles and they're getting valued anywhere from $5 to $15 million. So if you kind of stack that up and say you have a NASDAQ vehicle with, 50,000 shareholders, it's trading, tens of millions of dollars a day. If you just stripped out that business and put something in, I know there's a lot of NASDAQ rules, that is a vehicle. It's got at least a, $10, $20 million value. So you're discounting that, you're discounting management, you're discounting operations, and you're saying, I only care about this one metric. What's the balance sheet? What's the mNAV? And I think that over time, I think that's going to work for the Bitcoin ones because you can't really generate. It's really hard to generate yield unless you're adding additional risk. A lot of it with Ethereum and other, smart contract based blockchains. There's a lot of ability to build a real business there, and I don't think anybody's looking at that or cares about that now. So I think for the time being, mNAV works because Wall Street can get their arms around it. Over time, it's going to evolve as these businesses go into different areas and avenues, and it'll depend on more traditional metrics, like are you actually growing a real business here, or you should have a multiple on revenue or a multiple on your mNAV to reflect your actual operations, right? You're not just an asset manager.
Okay, cool.
Curious follow up on when you say grow the real business there, do we really expect the DAT companies are still operating their original business, or maybe you meant something else.
No, and that's you're spot on. So, like, that's why I don't look at us as a DAT. We didn't jump into this 4 or 5 months ago like everybody else. We've been doing this for 5 years. So, for all of the ones that went into like NASDAQ biotech companies, they're required to keep that old business per NASDAQ rules for anywhere from like 6 to 12 months. So they're going to continue to run that money losing business. And that's actually, one of the things the investors look at when they're doing these pipes is, well, what's the cost of maintaining this vehicle? When can they spin it out, give it to the original CEO? When can you get the old stuff out? So the question is, when they can stop doing the biotech or whatever business they were in before, what is the company actually going to do? Are they just going to sit there and, buy ETH, give it to Galaxy Digital to stake, and that's it? And they're going to earn, 3-4% on their holdings, net of a variable priced fee to the staker, or are they actually going to go build operations? I think on the Ethereum side, if these companies don't go build, one, it's a real disservice to the community in general and ETH to not be building on the blockchain that you hold so much of the token of, right? To actually make it successful, which I think would be really sad if they do that. But two, I don't see how you trade it much more than NAV, right? Maybe a little bit because you're generating some yield, and that if you're keeping your fees down, your net you've got a positive yield over an ETF. But if the ETFs can start staking and they've got a lower fee structure, like what's the value prop, right? I mean, I talked to a big investor yesterday. They'll just they'll buy the underlying via an ETF and short a DAT. Literally, I talked to a $4 billion fund yesterday that's doing that. So, just looking at the chart of, the DATs trading under mNAV, once you put these in public equity wrappers, it gives, very large pools of sophisticated capital the ability to play games. And if you can't differentiate yourself over time, you should expect to trade, you should expect to be kind of, I wouldn't, maybe manipulated is the wrong word, but your stock is going to be a finance tool, right? It's going to be used in an arbitrage strategy, and you'll never break out of that. That's at least my view, right? Others can disagree, but I don't see how, big money, the big money on Wall Street is going to be able to play these games with these small companies, even if you're a $10 billion company or $2 billion, company, for example, SBET. They're too easy to arb for, multi-billion-dollar funds, and everybody's going to see the same opportunity and try to squeeze that lemon.
And I think more broadly speaking, when Charles is saying build on the ecosystem, he means actually like deploying the assets. Like there's no native yield generation on Bitcoin where there is on Ethereum, where you're actually staking your ETH and running validators on there. So instead of just holding Ethereum, you should actually be deploying it in the ecosystem, is where he was talking about.
Yep.
Thank you so much.
Okay, cool. Yeah, we might touch a few points there, but I still wanna make everyone emphasize on the next question's answer. So the next one is about like the data we don't have yet. So let's say if you could have a magic wand and 1 or 2 like missing data points from DAT today, like this data can make like research, governance, or market trust far stronger. So what this data point would be? So I want to start from Charles too.
Well, I think the nice thing is, if you're public, you're already transparent, right? You're doing your Ks, your Qs, your 8Ks. I know in the crypto market, people want a lot more transparency. Everybody wants like real time, dashboards of how much ETH you have and, your acquisitions. I think the reality is, for public companies, it may not be in the best interest of shareholders to have, real time reporting. It kind of plays into the hands of traditional Wall Street to be able to play games. But, I mean, anyway, that's kind of my views on that. I think it's, there's just two different expectations between, what you're required to do, what some of the, native crypto folks would like to see, and what's in the best interest of shareholders.
Okay, cool. Yeah. Let's next is Danny.
Yeah, I think the metrics that matters, or the thing we would want or kind of like mispresented today is like, for example, some of the mNAV are being presented maybe not even in the pro forma way, borrowing the wisdom from our team, Cosmo and Cody and others who works on this daily. the critique is that basically when you issue a pipe to a lot of private investors, it always pairs with a warrant that is pretty substantial as well, with probably like a price that's set around like 150% of what you're buying from the pipe. And oftentimes it's very easy to like see the price of the stock goes up to higher than what the strike price will be, and at this point you should probably assume they will exercise the stock, the warrant, sorry, and that will possibly have a impact on the mNAV. And so today a lot of those dashboards are not really counting those, and so it probably mispresenting a lot of mNAV first of all. And the second thing, as everybody alluded to, is that it will be really interesting if we're actually able to track their own chain activity, or basically actually able to track what's the yields they are being able to generate. Because that's kind of like a big differentiator compared to that versus many other like crypto adjacent investment like ETF, etc. So yeah, I think there's still a lot of interesting data to be built.
Okay, next, Jake.
Yeah. Forgive me if my internet cuts out, but I'll try to make this quick. So yeah, if I could wave a wand, I'd want real-time transparency into the underlying assets. I know Charles mentioned that this is maybe something that's not feasible, especially like if it's not in the best interest of investors to have a real-time dashboard, showing exactly what holdings they have. But this is an ideal world, so I want it to be closer to a Web3 product that is very transparent. See everything on the blockchain. Like I would love that if I could, rather than there just being holdings reported quarterly or monthly through 10Ks or 10Qs. Like it would be great to have near real-time attestations. And then this would lead to it, but this would help solve the issue that Danny mentioned, where then you could see better, like a more accurate mNAV, and it wouldn't be a lagging indicator of whether there actually is a discount or being traded. And then also, as Danny mentioned, disclosure of strategy and their yield. Like what are they using their idle assets for? Are they staking them? Are they just holding them? So transparency from the corporation, and also in an ideal world, it would be a real time dashboard showing all of their DeFi positions. Maybe not exactly the amounts, but they could at least show us, we're putting, X amount of our holdings into this DeFi strategy that's earning us X% yield.
Yeah, actually, I think that a lot of the transparency that we're missing would be solved if the traditional market went onto or tokenized all of their assets. And I think that's one of the fears of these exchanges from tokenization, is that the dirty laundry is going to be aired in public. So all of these really shitty dilutive deals are going to be right there in front of everyone, and it might cause some issues.
Yeah, I mean, there's a reason why some big banks, Wall Street, publicly traded companies might not want to put everything on the blockchain, because then that means it's real time verifiable and they have to be less shady.
Yeah, exactly. It's like the cost of doing things the right way.
I don't think it's less shady though, and that's a pretty aggressive way of looking at it. I mean, for companies to put stuff out, if you're a public company, you have to be audited by under U.S. GAAP by a PCAOB auditor, and there's a process and procedures as auditors have to use. And if you start putting out effectively real-time revenue, you could create real audit risks, right? In terms of, are your numbers going to line up with what you report on your SEC filings? You could create real, liability for the company. So it's not as simple as like, hey, real-time transparency works unless the whole accounting system goes onto a blockchain, which I think would be great to do. There's actually, on top of that, if you look at where things are going, I think there's a push from the SEC to allow companies to report biannually. I mean, it's very easy to look at a public company and say, well, you should report, on a weekly basis, your mNAV. It's a lot of work. It's a lot of work getting the press releases together. They've got to get reviewed by counsel. You have to make sure you're not putting revenue numbers in. Then you've got to disclose them. Then you have follow up. And so you have small teams are spending a tremendous amount of time on, what would be real-time disclosure, unless it was somehow automated, for what benefit, right? So that investors can play arbitrage games to squeeze the lemon out of these companies when they don't even have time to build a business. So I'm not, if you look at why there's the ability to go to 6 months, which I think is probably going to happen next year. I don't know if BTCS would do it. Like, let the market decide what value it'll give on what level of transparency. So if you do quarterly reporting, maybe you have a higher valuation. If you do biannual reporting, maybe you have a lower valuation because there's more uncertainty on your business. But as you move to this real time, I think it creates a lot of issues if you're actually building an operating business versus just holding an underlying asset and you're just going to get arb to zero across all the other ones holding the same thing, right? So if you're an investor and you're like, I want the lowest mNAV, there's a lot of opportunities there if there's real-time reporting. If you're a company trying to build something, it's not in your best interest. It's like sitting at the poker table with everybody looking at your cards, right? On the opposite side of that is some smart hedge fund, and you don't know what their strategy is. They don't disclose what their holdings are in your company. And so I'm not a big proponent of let's get this, real time, because I don't think the markets are going to be fair. And I think how that information is going to be used is not going to benefit shareholders.
Yeah, I think what me and Jake were talking about with it being shady is more some of the dilutive funding strategies the DATs are doing, and even NASDAQ has even cracked down on lately with some of the like below market issuance where you had to get shareholder approval for certain raising strategies. And if that was transparent, I think things would be a little bit cleaner for some of these companies.
Yeah, but they're all disclosed in their 8Ks, right? I mean, people
Right.
just are too lazy to actually read, to sit down for 45 minutes and read a document.
Guilty.
Right? And that's the reality. It's, there's no TLDR on an SEC filing, right? It's like an ex post. And that's always going to be, a sentence. Like, if you really want to see what a company did, you've got to actually do your homework.
Danny, I feel like you had something.
Yeah, I mean, I think this is a really interesting debate. Because I had the idea like a few weeks ago when I just touched on this topic where I'm also I think the crowd here is largely overlap with MEV crowd, but so I think everyone's familiar with the relay data API that Flashbots issued when MEV Boost came out, and it has been a really good help for all of us analysts to look into MEV data, the bits posted by the relay. And I was thinking like if there is like a that data alliance like some of us can form, and we provided like a tooling for all the DATS company to self-report all the data in a real-time fashion, it will probably like inspire a lot of like analytics around it. But I think Charles really presented a lot of good arguments. I don't know if there's counter argument towards that yet, that all these high frequency trading firm will be basically trying to MEV it now. And that may basically distract the company trying to actually operate better as a debt company. I don't know if there's a good answer to that yet, but that's really interesting here.
Look, I can give you a great example. I mean, we have an ATM, right? We have a $2 billion shelf. The world was backwards when we announced it, and companies' stocks were going up when they announced these. We got, I think, the tail end of that, because usually if you put out a shelf, your stock goes down. But just because you put it out doesn't mean you're going to raise it. And so our stock came down significantly. Now we have a buyback in place. We've been very quiet. Why? I want to buy the cheapest stock I can. I don't want to, it's not a gimmick that we put out. We're going to buy back stock, and then the stock goes up and we sell more. If I'm going to say we're going to go buy back stock, I'm going to go buy back stock, and I'm not going to tell people how much I'm buying back until I have to. Why? Because if they know I'm buying, they're going to front run me. If I say I'm selling, they're going to front run me, right? And they read the smart funds, read the filings, they know what's going on, they call the ATM traders. This is what they do. And if you're going to, if you're a CEO of a public company, you're going to play into the game of hedge funds, you're going to get crushed. I mean, look at Nakamoto, their pipe unlock. Look at what happened to SBET. If you just look at these companies, you can't bring your checkers game to a chess match. And you've got to be a little bit creative, because it's not the traditional market structure is not set up to benefit companies. It just isn't. And I could spend a lot of time, I could spend hours talking about this topic, but you've got to try some things and you've got to, play your cards well. And I think these, the real-time reporting, the dashboards do not fit well into the current market structure if you want to do the best thing for your shareholders. And that's at least my view. I know some others may disagree, but I've seen what's happened to a lot of these new DATs. And just by way of background, I was an investment banker for 10 years, helping small and microcap companies, go public. And I've been, 10 years at the helm of BTCS. So I kind of have a pretty good sense of what happens behind the scenes on the Wall Street side. If that makes sense.
So thinking back of why people want a dashboard, I think like people want more transparency to understand better of like say if I'm a retail investor, which data should I pick out of all these rather than just pick the biggest one? And I'm curious, like everybody here, what would be a good way to really tell if it's a good DAT or it's a DAT will stay long term as me as like an investor in the market?
Well, if the ticker is BTCS, then it's a good DAO. Actually, I bet you Charles could probably answer that pretty well about what makes a DAT a good DAT and a good like custodian of the underlying assets.
Well, I think there's a short term and there's a long term. Even within the short and long term, you have to break down whether you're yield generating DAT or not. And so on the Bitcoin side, I think it's really all about like an attention multiple or attention metric, and definitely size. As you get larger, you're going to get included in indices, ETFs, and so you're going to get additional liquidity, which is going to put you on the radar of funds. So like MicroStrategy has done an amazing job of this, and has allowed them to trade at a premium. And they've gotten extremely creative with respect to coming up with new financial structures, preferred convertible notes, to slice and dice the exposure to Bitcoin. There's a lot of risk that's being added to do that. Then when you move to the comparing DATs that are yield generating, I think in the short run it's going to be what's your mNAV? That's all anybody wants to talk about. In the long run, it's really going to come down to what are they going to do that's different? Do they start investing in other companies? Do they start investing in other projects? Are they more of an asset manager? Do they actually build something? Are they going to go build a consumer-facing product with on top of Ethereum's blockchain? Are they going to what are they going to do? For us, it's always been about blockchain infrastructure. So we're a block builder, we're a validator, and we're looking at other opportunities. I can't really say much more beyond that, but it's always been like, how can we stay, one step ahead? If you're just going to stick a crypto on your balance sheet, you're going to continue your old business, and let's say you're a biotech business, I think it's a very different company, and you may not get the same, then you're just hoping that your treasury that you're going to do nothing with anyway goes up, and you have a, you kind of get a nice run off the news of it.
Jake, anything to add on how retail investors can value DATs? I think Jake might have been rugged. Let's see. We'll try to get him back up here. Danny, do you have any thoughts on that? I know you posed the question, but I'm actually curious to know what Pantera thinks about that.
Yeah. Also Jake is back, but also like none of this are financial advice, but from talking to that team, it seems like again, like if they can operate well, it's a lot of attention game, as Charles mentioned. I don't want to put it in a negative way, but to be honest, it's somewhat more like I don't know if it's the positive thing to say, but like I think it's a lower risk and regulated meme at some point, almost like, or at least how people are trading it in the market is really like pick a ticker or like a team that has been endorsing it that you trust and just like go with it, because really behind it a lot of these operations, or if they can really like maintain and like kind of manage the asset well, is not as straightforward or like quantitative for retail. So I think a lot of people are basically kind of playing the financial analysis in intuition there. But again, I think, yeah, like if the company can operate the thing and like be an asset manager, and potentially find the best yield. I was thinking, I don't know if it's true, also others can maybe provide information. For BTC right now, it seems there's no chain yield, but I guess the only way is either you mine the Bitcoin, or I think you can probably put them in like Ethereum as WBTC and earn yields as well elsewhere. But yeah, I think like yield generating as well is another point.
Yeah, can you guys hear me?
Yep.
Yeah, so sorry, my spaces is running, but I do want to answer Danny your question about like what makes a DAT a good investment. In my mind, the biggest factor is the team. Um, like that's your at the end of the day, you're putting your trust into the team to efficiently manage the crypto assets, to manage their OpEx, to run the company. Because it's not like an ETF that just holds the underlying asset. Like you're betting on the company, and at the end of the day, the company is the team. So, and that's also why we've seen, for example, MicroStrategy trade at a very high premium, sometimes a 3x premium to mNAV, sometimes 2x. I think right now it's around 1.5. That's just because everyone's bullish Michael Saylor. Like they know Michael Saylor is in this for the long term. So they can feel comfortable, paying a premium to get access to Michael Saylor. And it's the same thing like you see at ETH that's run by Joseph Lubin, like one of the co-founders of Ethereum. The guy maybe gives you more trust into that specific vehicle. So in my mind, like the biggest thing is the team, because at the end of the day, like mNAV at this point is almost like a meme. Like it as we've been saying, it doesn't necessarily track the underlying assets. It maybe isn't as efficient as we would like it to be. So in my mind, it's like more just what the investor's perception of the team and their ability to execute rather than truly, efficient of the underlying assets and expenses and the cash, etc.
All right. I feel like we've touched on most of these other questions here. But I see Brian has his cursor on this other one, so I'll ask this question to get the ball rolling here. What is the most exciting real world impact that DATs could create beyond crypto? Finance, corporate treasuries, even governments. Any pie in the sky ideas out there for this? And then we'll start with Danning.
I think maybe this is a short term thing, but at least it gives exposure to the stock markets, the crypto assets. Not only, I mean, if you're a retail, you can buy how to say, the crypto assets themselves. You can buy ETF already. But for a lot of like financial advisors or basically like institutional, how to say, entities, I think that will be a, how to say, like a legal regulated way for them to get exposure in crypto. Maybe in the long term, the regulation will open up and more, so it no longer is a regulation arbitrage. But for now, I think it's really interesting that it's like basically seeing the stock markets and crypto are getting connected.
Awesome. Jake? Oh, not hearing Jake. We'll jump to Charles.
I think that what the DATs have done is brought credibility to crypto through the financial markets, and in that awareness is going to spark a lot of discussions of why are you in Ethereum? What does Ethereum do, or what do these other tokens do? And it's also with the new administration going to allow for a backdrop of innovation and kind of I'd almost look at it as like rewriting how financial transactions work. So I'm pretty excited for it. I mean, I wish more of the DATs would actually build within the ecosystem. There's going to be tens of billions of dollars flowing into these companies, and it's substantial compared to VC funds that would flow into early stage startups building within the blockchain ecosystem. So I'd love to see these firms actually hire developers and build products and services to make the change that they're using more valuable. And I think the one downside to the DATs, and no one's ever really talked about this, is the way most of these have gone public. They've been through these huge pipes, and I know I've spoken to some of the pipe funds doing these, as I've been pitched to join those funds, and they're getting a discount, sometimes a pretty steep discount to mNAV when they do the deals. Plus, they get some warrants, depending on the team, and so their model is really, let's go dump on retail, and I think that's really sad, right? I'd really like to see, that's an old story, right? Institutions that are really smart in the stock market are able to do deals that retail investors don't have access to, and they get it later, and they end up holding the bag. And so I do worry about the way in which a lot of these companies have come public. Look at Nakamoto, what happened to their stock. Look what happened to SBET when they filed their S3 resale registration statement. It was down from 50 to 20. So that is one thing I do kind of worry about, is how these deals are structured.
Okay, cool. Yeah, I think we have last question. So what is the most important risk DATs must solve before they can scale into a mainstream asset class? So also I want to start from Charles, since Jake still have something not very well on his internet. So Charles, please.
So that was the risks, and I'm seeing one post that if a company's mNAV goes below 0, it'll be some death spiral, and I don't really see that as a risk. Right? I think once you've raised a substantial amount of capital, assuming you don't get hacked, lose your crypto, it should be really, really hard to go out of business, right? I mean, you really have to make some serious strategic errors, because the cost to run a DAT is very low. Even if you're not building anything, if you're burning $4 to $5 million a year as a public company, maybe even 10, but you're generating yield on 4% on $1 billion, you've got a profitable company. Like, what did you do to go out of business? You must have really thrown that money away. So I think it really comes down to the risk is the team, and if you have a good team managing the company, you should be able to grow, hopefully trade at a premium. And so I think the biggest risk is really the team. As far as like massive sell-offs for DATs, unless they're highly over-levered, I don't really see a price drop in a crypto being exacerbated by all the DATs, as long as they're not over-levered, because it's permanent equity, right? If they're over-levered, then that's a risk, right? That now all of a sudden they have convertible notes, they've got to sell the crypto to pay the notes, and then that creates a decline in the price of the crypto. But I think apart from MicroStrategy and maybe which is levered, I don't really see that, at least on the east side. I think we're the only ones with debt. We're not over levered, right? We're using Aave, so it doesn't come due ever. And I don't think Bitminer or SBET have levered their balance sheets much. So and I guess BTBT did a little bit, right? They just did $100 million deal. So I don't really see a huge amount of risk, apart from, I think the biggest risk, kind of summarizing, is management, right? If you have a good management, you shouldn't really have too much risk. Otherwise, it's I think what you see in the media is not necessarily accurate.
Cool, very cool. Next, Jake, since you're back. Yeah. So what do you think is the most important risk DAC must solve? Yeah. Jake? Okay, I guess we move on to Danny, since Jake is still not here yet.
Yeah, I think the common list of things like security risk of like if your assets are safe, etc. And also if you're exposing those wallet addresses, probably is increasing that risk, even though it might be demanded by transparency. But I think overall, I can see that the more like a liquidity mismatch, or like given that all these crypto assets are volatile, it's possible that like during a volatile market how to say, shock, if say some kind of like big events happened, all these assets are dropping or somehow maybe like causing the mNAV numbers go shaking pretty crazy, and at the same time maybe the company already has some issuance or new equity program, but then now the value dropped, and so that can cause maybe some like distrust or maybe like some concerns between both like private investors or also the market, and the whole thing may look kind of like spiral, but that would be maybe one scenario I can think of. But otherwise, as Charles kind of said, it's like really like you're holding that assets, if assuming they're safe, there is not really much risk for anybody to like put money in as long as like it's around the one mNAV. So yeah.
Okay, cool.
Can you,
Jake, are you back?
yeah,
Yeah,
can
yeah,
you hear me?
yeah. Sure, go ahead.
Yeah, so risks I see, first, like there's dilution from at the market equity offerings. So as they keep DATs keep raising money to buy more assets, there's dilution. Operating expenses, as we mentioned, these are public. These are companies. These aren't just hold. They don't just hold. They have a company run. So there's operating expenses, governance concerns if there's a lack of trust with the team, and then also some financing risk. I know Nasdaq had that tighter scrutiny. However, most existing DATs are fine. They're not effective, but for newer DATs, there is that scrutiny, that scrutiny risk.
Awesome. Yeah, we are coming to the end of this tier space. So I want to have every speaker to have one sentence for the audience to take home today. I want to start from Jake, since you have the opportunity to speak while internet is still on. Yeah.
Cool, thank you. Yeah, so I would just say DATs represent a unique opportunity for TradFi and institutional players to get access to crypto assets. However, there are risks that come with it, and not always guaranteed that they're going to trend towards one mNAV.
Okay. Next one, Danny.
Yeah, I generally think that that is a interesting new innovation. It will stay here for the long term. It makes sense as a vehicle, but there's definitely right now a bubble, I guess, in the market. A lot of these stats will consolidate, right? And like in every category of assets, I believe there will be a few good DATs, and I believe like all these strong assets will have a DAT. So yeah, bullish about it, but definitely also I'll say monitoring the situation carefully.
Okay. Last but not least, Charles.
Yeah, so I'm going to keep it to one sentence. I'm super bullish on Ethereum. I think it's going to change the rails of finance, and BTCS. We're much more than the DAT. So I encourage everyone to do a little bit of research on us.
Little shameless plug there at the end.
Gotta have it.
Totally fine. Charles, we appreciate you joining us last minute on this one. Obviously, Danny and Jake, we're really thankful to have you guys on here as well. Thanks everyone for listening in, and hopefully we'll have another one soon about DATs, but we'll have plenty of more MEV spaces to come.
Yeah, round of applause for all these speakers here. Thank you guys for being here. Hopefully we'll talk to each other again pretty soon. Thank you guys.
Thank you for organizing.
Thank you.
Bye bye.
Okay, have a great one.
Thanks everyone.